Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of an investment of $1,000 to a return of $1 million over a period of 3 years using a strategic or compound return investing. So the objective is try to get 201 trades, each with an average return of 3.5%. It's not 201 consecutive trades. We do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be looking at the article in the Wall Street Journal by Alex Oshitowicz. I'm not sure if that's pronounced correctly. I'm sure he can correct me if it isn't. And we're also going to be looking at some reactions. So before we get started, let's have a quick look at what's happening in the market. So first headline here from Bloomberg. Tech stock sputter as traders up rate hike bets. So there is a little bit of fear that there could be an upcoming increase in the interest rates. However, that's not guaranteed. Tech stocks have been dropping in the last 5 sessions, and there is speculation that the interest rates may be going up. So we have a look at the reaction in terms of the heat map. Some of the key tech stocks are down, including Microsoft, Nvidia, Adobe, Google and Amazon. However, Tesla is doing fairly better, and we are seeing a nice bounce back also in the energy sector. So let's start by having a look at the post from the Wall Street Journal, and what they stated earlier today is individual investors are on the warpath after a bad bet on over-the-counter energy shares touted on social media. So the article was quite misleading. We're going to go over that shortly. So before we have a look at the article, first of all, this is my response to the Wall Street Journal, and I did say that we need better journalists who understand financial markets and not compromised by self-interest. This was not a bad bet, but a situation where nefarious actors colluded to not follow securities legislation. So before we have a look at the article, let's have a look at the person behind the article and who is responsible for it. And the reporter goes by the name of Alexander Oshitowicz. And what his background is, he's worked for the Moscow Times, he's worked for the agency France Press, covering news from Russia, and he's also worked for the former Soviet Union. So I don't know how far he goes back in Russia, but certainly I think his skills certainly seem more aligned to covering the old Soviet Union, the old Russia, and I think an understanding of US markets is not something that he seems to be familiar with. Let's now have a look at the article by the Wall Street Journal titled How the Stock Ticker MMTLP Became an Anti-Wall Street Rallying Cry. So according to Mr. Alexander, who worked in the old Soviet Union, according to his opinion here, thousands of investors made an ill-fated bet on over-the-counter securities that were highly touted on social media and represented a claim on a small Texas energy company with no proven oil reserves. So I'm not sure what gives Alexander the right to say that everybody made a bet. I think that's not how stock market works. The stock market works by obviously researching due diligence, understanding what the company is. It's certainly not gambling in the form of going to a casino. So obviously he does not understand trading if he thinks everybody was betting. So not a great start to that. And he's repeated the word bet. When the bet soured last year, an army of angry individual investors went on the warpath. So correct me if I'm wrong. I didn't know when you make a trade that is a bet. A bet is a gamble. A gamble is something based on risk. However, investing in the stock market is something that you do with due diligence, and it's not the same as gambling as far as I'm aware. So they didn't blame the company, they didn't blame the online promoters who predicted an epic rally. Instead, they blamed the regulator that halted trading in the securities. This is where he ends the paragraph. What he should have done is followed this up by explaining why investors have got questions from the regulator, and obviously the key question he should have addressed straight away is the securities legislation. Obviously, were there any short positions that should have been closed? Were the brokers and dealers following the guidelines according to the SEC and the FINRA regulations that they are obliged to follow? So he's just ended the paragraph there with no context. And then he's also stated here, market veterans say investors' rage is misguided. So who are these market veterans? Give us names, give us sources. You are a journalist. You're claiming a fact here, but you're not providing evidence. So as far as I'm concerned, this is very, very misleading. And Mr. Alexander, who previously worked in the Soviet Union, that is not good journalism. Who are these market veterans? So the next thing he goes on to say here, MMTLP's shares were set to be converted into shares of a new non-publicly traded company called NextBridge Hydrocarbons. FINRA halted trading. Such halts are part of FINRA's toolkit for preventing market disruptions. So he's buying into the thing about market disruptions. So obviously no understanding of what happened, and obviously the lack of clarity from FINRA of why this happens. And he's also not going ahead to try and question and understand the halt and why the halt was called for. So Alexander also goes on to say that market professionals dispute the idea that naked shorting is widespread in US stocks. So who are these market professionals? I would call them unprofessionals and not professionals. He's basically stating a claim here that naked shorting doesn't exist. So I don't know what planet he's on. If that's what he believes and that's what he's stating, then he has no understanding whatsoever of financial markets, and he needs to go back to the Soviet Union and learn about journalism again in terms of his history and background. So that's not a good statement at all. In fact, everybody who trades on the market, everybody who understands the market knows that in the United States, naked shorting is a widespread problem, and market traders and investment professionals do know this. So he thinks the professionals that are disputing this, I'm sorry, Alexander, you are wrong. What he has said further down, which I think is interesting, Republicans in the House Financial Services Committee are conducting a preliminary review of the events surrounding MMTLP and the regulatory response, a spokesman for the committee's majority said. So I'm quite pleased with that. Confirmation here that there is something going on in Congress, so at least it has brought that point up. So further down, what Mr. Alex is also saying is a registration statement for that the price of MMTLP may rise significantly. Yes, we were aware of that. Due to short sellers buying shares to exit their trades. That's what happens in the course of trading. He's also going on to say, echoing claims that where investors with online followings, such as the Bird Lady, who posts on YouTube's, and he's also going to say, in terms of a quotation here, there's going to be a very high demand for these shares. Judgment day is coming. Quotation from the Bird Lady. And he's also stated the Texas woman said she wasn't involved in a pump and dump schemes and hadn't sold any of her shares. So I think that is correct as far as I'm aware, where Tony from Market Moves, Terry as well as the Bird Lady and myself included, none of us have sold a single share. So I can certainly speak for myself. The Bird Lady has stated the same thing, and I'm sure Tony and Terry can confirm that as well. So not a good suggestion to make there. So further down, he's stated here, FINRA halted trading. FINRA said it is because the US stock trades 2 business days to settle. What he didn't fail to recognise is how much notice FINRA had, what happened with the corporate action, how long did FINRA know about these dates, and why did they suddenly wake up and realise, hold on, we have a problem. So he's also stated here, December the 8th, someone buying MMTLP wouldn't be able to get eligible to get NextBridge shares, so their unsettled MMTLP shares would be an empty shell with zero value. And he's quoted here from FINRA Chief Legal Officer Robert Colby, who stated, if we hadn't halted traded, we would have had investors rightfully complaining about having been badly hurt. So this FINRA, obviously legal officer, is saying he did that to make sure people holding MMTLP didn't complain. So the FINRA Chief Legal Officer, Robert Colby, he was trying to avoid complaints. So how ironic is that? And he says if we hadn't had the U3 halt, everybody would have complained. I'm not sure if he understands what he's talking about there and what planet he's on. We did not want the U3 halt, and we would not have complained if it had carried out its due course and there wasn't a squeeze and shorts are already covered. We obviously accept the risk of trading. So let's finish off and have a look at the final part of the article. He stated here, some investors have urged FINRA to release data to confirm or disprove their theory that MMTLP were subject to massive hidden shorts bets before the halt. So again, you're wrong there, Mr. Alex. Not some investors, almost the vast majority, almost every single investor of MMTLP wants and urges FINRA to release the data. In fact, I'm not aware of any genuine MMTLP investor who doesn't want the blue sheets removed. So again, very bad journalism there, Mr. Alex. And he has said, if you have any questions here, he says, write to Alexander Oshitovich at alexo@wsj.com. So hopefully somebody can enlighten him with some tips on positive journalism. What I'd like to do is share some reactions from some of the community. So first shout out here is to Chris Rhodes, who stated, missed some key facts, didn't they? MMTLP was a ticker made by a couple of ethical market makers, so ethical in inverted commas. The preferred share was not to be tradable. So again, good point there, Chris. And Alex did not confirm and mention this as something that was important in the whole story. Broker dealers and VP of OTC said it would trade until the 12th. So a very significant broken promise and contractual obligation, in my opinion, there that was not completed. Shorts did not close. Reconciliation not possible. U3 protected who? Question mark. So next shout out here is to Deadly Clappy 87. No mention of the FOIA emails. Very good point. Showing FINRA concerned about fraud. Are you a serious journalist? I don't think so. You talk about FINRA halted because of an uncertainty in settlement. And one thing you forgot is the SEC approved the final day's trading timeline that FINRA halted. Yes, they did. And we also had the corporate action notice confirming that. So Tony here has stated for the attention of Wall Street Journal here, Nextbridge Hydrocarbon shares at a dividend that is owed to all MMTLP shareholders. Dividend was issued and distributed by the company. Shorts did not pay this dividend. They have to pay it. That is the law. That is legal. That is securities legislation. Longs are owed shares that were never received by for 180 days. FINRA halted trading, prevented shareholders from receiving their dividend, and obviously those short positions are now in a non-tradable private company. So very strong points there by Tony. And if we go on and have a look at Winston now, he stated, if this is just a bunch of misinformed crazed nonsense, release the data, not just the blue sheets, names and findings of those investigating it before the halt. It was supposed to conclude trading on the 8th of December. And obviously that did not happen. And the final thing I'd like to share with you is some news from Junk Savvy, who stated just recently, breaking news, new filing, New York Supreme Court, FINRA consents to Brazil's request to enlarge word count and page limits. Current limits are 10 pages, 4,200 words. Extension allows 15 pages, 6,000 words. So positive news there, and that should give Mark more room there to add additional facts, additional information in his case. I finally like to finish off by giving a shout out to our Discord, where two of the stocks that we covered were the best performing stocks of the year with AI technology and improving financials. So this stock here, currently trading at $18.44, is up approximately 244.67% in the year. And as you can see in the 1 year print chart, this stock is not pulling back and it is still continuing. And the other stock that we shared in the Discord, currently trading around about $232.99 at that time it was shared in the Discord, and this is a stock that is also shared in our spreadsheet, available to the exclusive to the Discord members. So if you'd like to get access to not only these two stocks and many others, you can certainly join us. Details are in the description below. Thank you very much for watching. Please stay tuned.